Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today's Thursday, July 7th, 2011. This morning I'm talking about interest rates and employment looming over the markets. And we're looking at a chart here of the pound, 5-minute chart. Okay, you can see that this last candle is just a little bit of a doji happening there. We had the Bank of England rate decision just come out, and as expected, they left rates unchanged at 0.5%, left the asset purchase program steady at $200 billion. Okay, and it looks like they're going to be content to let the inflation die out on its own if that's possible. Okay, but government austerity has reduced spending in the region, and growth is slowing, so it is possible that inflation could come down. I think one of the problems that they are unable to control and unwilling to take a look at is the fact that really inflation is driven by U.S. dollar policy and not so much what goes on in the U.K. So as you can see here, we got the pound trading. We're just below the 160 area, and we can drop back here on the old 30-minute chart and see, okay, it looks like 160 is that sort of psychological area of support and resistance, sort of a tipping point where it could be floating around in either direction. Now, we're also going to be waiting here on the ECB interest rate decision, which is going to come out in about 45 minutes, 7:45 Eastern time. Okay, just go to the 5-minute chart as well. You can see here we're putting in a little bit of a double bottom on the old 5-minute here, 142.75. Okay, but if we drop back just a little bit, you can see that the trend looks like it's starting to creep lower. So we've had this a series of action where we've got what looks like a series of you can call them either bull flags or bear flags, bear pennants, where you get this sort of action where it comes down, up, 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 down, up, 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 down, up, up, down, and you get the idea. So it looks like perhaps the pound may be, the euro may be looking at a move a little bit lower here on this rate decision. Now, in this rate decision, they're expected to raise interest rates by 25 basis points up to 1.5% from 1.25% right now. And this, is happening despite the issues that they're having with the Greece debt crisis, how they're going to fix this without creating a default. Also, that Portugal's debt just got downgraded to junk, and that the market's sort of turning its eyes towards Italy's as credit default swaps there prices are going up, meaning it costs more to insure Italian debt. So that's usually a sign that perhaps something's coming. Other than that, though, in both the UK and the EU economies, all right, things don't look too bad. Now, in the UK, industrial production figures fell 0.8%, which is a little bit more than expected, but manufacturing production figures were actually up 2.8%, which is a little bit more than expected. So they sort of even each other out. In the Eurozone, German industrial production was higher, 7.6%, and they're pushing the month-over-month number up to 1.2%. So those are pretty good numbers as well. So, things might be looking all right there as far as economies, if they can just get this debt under control. It's the kind of thing where, if you just, you'd look at these countries, but think of them as an individual who maybe bought a house that they couldn't afford and was swimming in debt. But, the guy lost his job and all these things happened. But all of a sudden now he's got his job back. He can maintain his current lifestyle. He's pared back. He's managed his money, and the only thing he's got hanging over him is this looming debt. Well, if they can figure out a way to let him pay it off, either by reducing his payments or modifying his interest, or perhaps forgiving some of the debt, then that guy's going to be okay. So I think that's the situation going on in the Eurozone right now with Greece and Portugal, and how these other things are happening. So that's what's going on the other side of the pond. Let's just take a quick peek here at the Aussie. I want to show you the Aussie. Aussie had, right here overnight, they had better than expected employment figures come in. All right, they were expected to add roughly 15,000 jobs to the market, but they added 23,500, which was good. The unemployment rate stayed steady at 4.9%, so that's pretty good. And you can see maybe we're setting up a little bit of a what looks like could be a bull pennant here. Okay, you got this action going up higher, and you've got this little bit of a triangle. All right, perhaps that means we're going to make this distance here, say 107.50, maybe do another 50 pips to the upside to 108. So we're going to keep an eye on the Aussie, see what's happening there. All right, and then later this morning in the U.S., we've got initial jobless claims coming out. We're expecting an additional 420,000, which has been the norm here, and We've also got oil inventory numbers, which for some reason now they're claiming that oil is trading on actual supply and demand figures and not interest rates, after we had that news last week that the IEA was going to release oil from the strategic reserve. Well, since that announcement, oil's gone down and it's sort of bounced back, and we're up around 96, 97 bucks a barrel. Okay, which yes, it's under 100, but the relief provided by that announcement has been very short-lived. But this morning we've got risk-taking going on in the market. We have equity futures higher. Okay, stocks are higher in Europe. And we've got commodities, which are, gold's a little bit down. I think oil's right around flat. So we're expecting, maybe the supply and demand dynamics of oil to take over. All right. And then lastly, just want to show you, we looked the other day at dollar CAD. Let's look at the loonie here. Okay, you can see it looks like the dollar's weakening versus the loonie. This is on the 30-minute chart, and we're just pulling back into this 96 area maybe. Now in Canada, they've got their PMI figures due out, and they're expected to be a little bit less than last time around. So if they beat those numbers, those should be pretty good. And you know what? Let's also just, while we're at it, we'll take a quick peek at the at Japanese yen here, and you can see that we're just hovering around 20 pips on either side of that 81 figure. Now tonight we're going to get Japanese trade balance figures, which are expected to show that the the supply chain disruption, from the tsunamis have affected that trade balance, and that it's possible they're in trade deficit. But we're gonna see what happens there. So that's kind of what's happening today. We've got the ECB rate decision coming out in about 40 minutes. All right, and then tomorrow, obviously, we've got the U.S. non-farm payrolls report, which is going to be a big mover in the market. But we also have a Canadian employment report as well, so keep an eye on that one. So let's watch what happens here with the interest, because if the ECB does go ahead with and raise the interest rates, okay, it could be a sign that, the economy is doing well, save a couple participants. And if they can just get, these things figured out for these participants who aren't doing as well, then maybe they're on the right track there in the ECB. So that's what I've got today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.